Anji, good evening, everyone. Good evening again, Ben Reddy. Okay. Present लगाओ सब. Mark your attendance. Test है आज. Chapter 9 के test है आज. I hope practice questions सबको मिल गए. All of you have got the practice questions. I uploaded that file. Correct, incorrect, descriptive type questions from the whole chapter. Even what we'll be covering today, the balance part of the chapter which is left, including that. Correct, incorrect, descriptive type questions. I discussed it with you during the previous sessions as well from the previous exams itself. And today we'll be practicing the MCQs here itself in the session in the form of test and no team test. Today, individual tests of the 6 sessions. Okay, individual marks, and let's see. गुप्ता जी राधे राधे, पिछली क्लास में कहाँ थे? कितनी बार याद किया आपको? Yeah, sure. I'll be taking that up. Siddharth Milabjo. तिवारी जी प्रेजेंट हैं. Where is राहुल? राहुल का नेटवर्क क्वेरीज बहुत बाद में आती हैं. Even when the session ends. Rahul, are you there? Okay, Bandadi. Important essays. How can I tell you important essays, right? um, Try to stress more on those essays which are a part of your chapters, linked with your chapters. Okay, Bandadi is here, Hitesh is here, Meghna, Sudhanshu, Siddharth, Nilabjo, Pooja, Komal, Aditi, Shruti, Karthik, Sonika, Deepak, Mohammed, खुशी. राहुल आ गया. राहुल आ गया. ओके राहुल. नमस्कार आचार्य जी. ओके. जियो नेटवर्क इश्यू था. ओके ओके, माइट बी. आई थिंक मेरे एंड पे भी वही प्रॉब्लम हुआ होगा. कुड बी दैट रीजन ओनली. So I wasn't able to open the query link. क्या बोलूं बनरेडी? He says कुछ आसिम कुछ तो बोलो. Okay. What about others? Any doubts from the previous session, please? Any doubts from the previous session? And today's part of the chapter which is left is quite relaxing. It's quite easy. You'll be guessing everything on your own. The current assets and current liabilities, quite a favorite part of all commerce students, all professional students, will be just finishing that up in not. We'll try to finish that up as soon as possible, although maintaining the pace so that we do have time for our final revision and the test. It's fine, Pooja. Okay. No doubts from the previous session. Okay. So one doubt was TCWG, those charged with governance and the people from the management. Those charged with governance people are the officers in the company, basically, who have the part of accountability. They have specific works given to them, those charged with governance, to look over the governance, transparency, fairness in the company. Management are the people who day-to-day affairs, important decisions. If you talk about examples, so the board of directors, they belong to the management category, and the committees formed by them, for example, the shareholders committee, the minority committee, the audit committee, right, the CSR committee, corporate social responsibility committee, different committees. So the committees formed out of the board could be an example of those charged with governance who are accountable for their respective tasks. Okay. Management is obviously the higher level than TCWG, those charged with governance, and they can overlap as well in some situations. People from management could be a part of TCWG as well, and vice versa. I hope I'm clear. I'm good, Mr. Alam. Yeah, been ready. My. I'll be taking up one more chapter with you people. The chapter 13, the last chapter, the world of various audits. So yes, I'll be taking that chapter up, and any miscellaneous issues from the whole audit or anything else, you can always come up with that during the last chapter, the last class of your batch. I'll be taking that up. You cannot specifically classify it, Nilabjo. General manager is management or TCWG. More or less, I would say he'll belong to TCWG, but it is situation specific. Kushi, it's completely fine. Even 18 was the highest score. If not 28, even 18 was the highest score. It's fine. My God, Karthik, पिछली क्लास का सब आज couldn't see you in the previous session और आज इतना बड़ा note. Okay, let me see. Good evening, Prema. हाँ, yes, bun ready. I saw you on LinkedIn. Thank you. I'll follow back. Okay, Tiwari ji is Tiwari ji. So see, I've uploaded the practice questions and the last leg of the notes. What we'll be doing today itself. What I'll do, I'll make one file of the whole chapter, clubbing all the previous notes as well as the today's notes, right? Whole chapter 9, one file. So I'll upload it by tomorrow so that you have all the material of all the sessions at one place. Okay. And the chapter chart, I'll upload it separately, either tomorrow or by Sunday. Please bear with me for that because I'll have to take due care. Quite attentive it has to be while making that chapter chart for you people. And that would just be an example so that following that chapter chart, you can prepare other chapter charts or other charts from this chapter itself on your own. So chapter chart is a promise for sure, Tiwari ji. I'll be uploading that either Saturday or Sunday. Good evening, Aita. Okay, so Gupta ji ki questions. Share capital assertion, valuation in the notes. It is mentioned that valuation assertion includes all that is related to the following. Karthik, whatever you find in the study module, there are some parts, like if you're talking about share capital, reserves, and surplus, there are some parts in the module where there are common points. All the assertions have been mentioned at one point, and there are common points belonging to all assertions, right? So whenever such kind of things happens where you cannot separately classify any assertion to a particular audit procedure, so you'll get only common audit procedures. I've tried to bifurcate them as per the assertions, but whenever assertions are so common that it is not like feasible to bifurcate them into what is completion, what is valuation, what is like existence. In that case, it is completely fine. Your doubts are appropriate at its place, but in that case, you'll not be asked separate questions from that. You'll be asked questions based upon assertions only when you have clear-cut, defined, and separate procedures with relating to assertions. Okay. Karthik has written such a big para. I don't know. The last class he was missing, and suddenly out of nowhere he explodes a bomb like this. Okay, chaliye. So I hope TCWG. Sir, if I include correct points in wrong assertions, so marks will be deducted. Aditi, could be if there are specific points with respect to each assertion, but if there are common points somewhere in the module as well as in the notes, you'll find it. There are some common points, and it is completely fine. I hope the difference between those charged with governance and the management is clear. Everyone, good evening, Shaktivelan. Okay, nice. So, chaliye, let's move ahead and finish off this chapter. Right? Okay. Fasten your seat belts. Right. Chaliye. Trade payables and trade receivables. We all know what are trade payables. Liabilities in addition to borrowings, trade payables, other current liabilities like outstanding expenses and all, deferred payment credits and provisions. So when is a liability treated as current? We did the non-current liabilities part in under borrowings. Now when a liability is considered to be current, if it is due to be paid within 12 months and held primarily for the purpose of being traded in the entity's normal operating cycle. So it is you are going to pay it or you have to pay it in any time in within 12 months. So incurred a liability as on day and you might have to pay it by tomorrow, by next month, by within 6 months. The liability which has to be paid within 12 months is known as current liability. Short-term debts, dividends, etc. Dividend liability for the company declaring it. Verification of liability is as important as that of asset, considering if any liability is omitted or understated or overstated, the financial statement would not show a true and fair view of the state of affairs of that entity. Obviously, omitted, that means a very good position. The liabilities are so less. Understated, again, strong position. Otherwise, it is not. But due to less liabilities, if they get understated, it shows a strong position actually, which is not. But if they are overstated, a weaker position. Trade receivables. Again, you call it trade payables, trade receivable, creditors, debtors. They are an essential part of any organization balance sheet, often referred to as debtors. Typically, an invoice or bill, whatever you call it, is raised and issued to the customer with the invoice amount being recorded as a debtor balance. So whatever is the invoice amount, You purchase 5 kg tea from me and I give you the invoice. And you say, खाते में लिख लीजिएगा. Add it to my account. That khata, that account is the debtor account by my name, right? So until the invoice is paid for the 5 kg tea, the invoice amount is recorded in the organization's balance sheet as at accounts receivable. And as on 31st March, whosoever people are there, firms are there, entities are there, who owes that amount relating to trading, current assets, current liabilities, always related to day-to-day trading of the business. While non-current assets and non-current liabilities just facilitate doing the business. But current assets and current liabilities are the main part of the business. Okay. If these balances are not recoverable later on, then these amounts need to be written off as bad debts and charged in the statement of profit and loss. I hope you all know about bad debts. Okay. So for trade receivables, this is a separate part. We'll be doing trade payables and trade receivables side by side simultaneously because most of the procedures are common and they are like twins. They are like twins, completely different from each other. Creditors and debtors, right? Completely opposite twins. But we'll study them all together. Whatever be the different points, specific points, we'll do them separately. But each and every assertion and all the procedures will be doing them simultaneously so that we are able to make a difference. And there are some common procedures as well. So there is like we need not waste our time on reading that part again and again, time and again. Okay. So this part relates to trade receivables, only the debtors. It is important to carry out test of controls for checking the effectiveness of internal control over sales as a part of the debtors audit procedures because debtors are directly related to sales, the credit sales. So we have to check the test. We have to test the controls to check their effectiveness over sales as a part of debtors, the credit sales. What points do we need to keep in mind? Only bona fide sales lead to trade receivables and there are no fake or fictitious sales. Bona fide means actual, which are actually yielding us some revenue. All sales are made to approved customers. Approved customers as mean actually they are the real customers. All sales are properly recorded in the books of accounts. Once recorded, the debtors can be settled only by receipt of cash or on the authority of a responsible official. Either they pay in cash or even if we are waiving it by the authority of a responsible official. Approval. Segregation of duties at every point in sales transaction. For example, who's accounting for debtors is different person. Person collecting the payments is different. For example, A is accounting for debtors, B is collecting the payments, and C will be sending the reminders. Because there should be segregation of duties. Debtors are collected on time. In case the debtors are not collected in time, sending reminders and taking legal action, sending legal notice for the recovery. Balances are regularly reviewed so as to keep a check on the balances which are quite old. A proper system of follow-up exists and if necessary, adequate provision for bad debt should be made by preparing adequate aging schedule of debtors. Aging schedule of debtors, I'll show you in the parts to come. How many debtors are 30 days old, 3 months old, 6 months old, more than 1 year old? This part is specifically related to trade receivables and could be a potential question for your exams. Shriram, for example, if you write off bad debts, in the same way, if there are trade creditors whom you are not paying and they write off your balance as bad debts in your books. And if there is a legal provision involved, sending notices, there is basically the Limitation Act, where after 3 years, if the balance still remains the same, it becomes time barred. And for time bar debts, you have to take legal action. Only then you can, there should be something which is, which evidences that you took all the necessary steps to recover your amount. So for as far as debtors are concerned, you charge them as bad debts. But if creditors are concerned and you have not paid them, then that is your benefit. There was no outflow of cash. If there was no inflow of cash, you charge it as your expense. But if there is no outflow of cash, then you have to take it as your income. Because writing debtors off in the books makes you charge bad debts. In the same way, writing creditors off, waiving, creditors have waived our balance. Creditors say, okay, we don't want this amount from you, we waive it. Enjoy, maza kijiye. In that case, that is a benefit, that is a profit, trading profit, because we don't have to pay them. For example, I had purchased 2 kg of tea at 500 per kg, 1000 rupees I owe to person A. So I have debited that purchase in my profit and loss account, trading account. I have claimed it as an expense. I've sold it further. I've realized money from the sale of that particular tea, 5 kg, but I'm not paying that 1000 rupees to person A, and he says, okay, waived off. I don't want this money. Enjoy. I have already recorded that money as an expense in the form of purchases in my financial statements. So, but I have not paid for it. I recorded it on accrual basis. If I haven't paid for it, this is my benefit. There should not be unjust enrichment. So I'll credit it to my profit and loss account that yes, the creditor has waived my balance off. I hope, Shriram, that is clear. Bona fide means for value, people. Bona fide means for value, actually for value, which is benefiting you. It should not be a free sales, free samples, or something like that. Fictitious sales, right? Approved customers means there should not be fictitious sales, and bona fide means actually for value. Okay, assertion 1, existence. So D here means your trade payables and other current liabilities. So wherever other current liabilities fall into picture, I'll mention them separately. And F means your debtors. So how do you check for their existence at period end? For trade payables, check whether there are controls in place to ensure that any purchase or expense invoice does not get recorded more than once. Duplicate recording should not be there. And payable balances are automatically recorded in the general ledger at the time of recording the expense. I have purchased tea from A. What would I do? Debit purchase account, credit A's account. So the software should be like this. Automatic entries should be posting to respective ledgers. If I have recorded my expense of 1000 rupees of purchasing tea from A, I've debited the purchases, but it should be properly credited to A's account because he is my creditor. Right? Same case in the case of debtors. Check whether there are controls in place to ensure that invoices cannot be recorded more than once. And receivable balances are automatically recorded in the general ledger from the original invoice. Here it is purchase and payment. Here is it sale and receipt. Same point. Obtain the accounts payable aging report. It is for the auditor. And trace its balances to the general ledger. If there are any differences, investigate reconciling items. Journal entries, especially for large amounts, should be carefully examined. So what are you doing? Basically, you are examining the ledger with the aging report. And if there are any reconciliations required, ask the management of the reasons. It is an automatic software. Why is there a different balance standing in the ledger, but it is in the aging schedule, it is showing different? Or there could be differences relating to time, wrong classification. The same case here. Ask for a period and accounts receivable aging report and trace the balance as per the report to the general ledger. See, if you're just remembering, understanding, learning one point, it serves both trade payables and trade receivables. That is why I've kept it side by side. Now, in the case of debtors, specific points, check whether realization is recorded invoice-wise or not. If not, check that the money received from debtors is adjusted chronologically, invoice-wise, and on FIFO basis, first in, first out. The older debtors are adjusted first. Or if there is a person B who owes me 5,000 rupees, gives me 2,000, comes to me, he says he wants more tea, gives me 2,000 rupees and purchases tea for 1,000 rupees more. Old balance 5,000, new balance 1,000, total balance 6,000. He pays me 2,000. I have to adjust this 2,000 paid by him against my old 5,000. So, from that chronologically, invoice-wise, FIFO basis, first in, first out, whatever was the first balance outstanding, that should be adjusted for the same person as well as for different persons as well. You have to move chronologically for the payments received. It is usually for the same person. Previous bill is adjusted first, the old balance is adjusted first, and then the later on. If realization is made on account, verify whether the company has obtained confirmations from debtors in respect of the same. If any large balance is due for a long time, auditor should ask for reasons and justification for the same. Quite a normal point. Yes, Hitesh. Direct confirmation procedures. What are the same meaning? What is direct confirmation procedure? As 505, external confirmations. You ask the third parties directly. An important audit activity is to contact vendors. If there are vendors in trade payables, there would be customers in trade receivables. And ask them to confirm the amount of accounts payable as at the end of the reporting period under audit. This should necessarily be done for all significant account payable balances as at period end for parties from whom material purchases have been made. Material could be of high value items, of high quantity items. Even if period end balance of such parties is not significant. Period end balance is somewhere near 1 lakh. Total creditors are somewhere 1 crore, but you have made material purchases from that, either high value items purchased or purchased in large quantity from that creditor. Even then, it becomes significant for you. Right? Here, the same is for the customers and with respect to unpaid accounts, the same procedures. You'll have to ask the vendors in the case of trade payables or the customers in the case of trade receivables directly that how much do you owe the company, how much the company owes to you. Give us a certificate, give us a copy of account statement. And how you can ask for that? Do you need to send a form? Do you need to send an SMS, WhatsApp, mail? Let us see. The auditor employs direct confirmation procedure with the consent. So consent of the entity under audit is important. There may be situations where the management of the entity requests the auditor not to seek confirmation from certain trade payables or trade receivables. Please say, don't ask A or B. They will not give you the right answers. We are telling you. So as an auditor, what would I do in that case? In such cases, the auditor should consider whether there are valid grounds, reasons for such a request. In appropriate cases, the auditor may also need to reconsider the nature, timing, and extent of his audit procedures, including the degree of planned reliance on management's representations. How much can I rely upon the management as decided while planning the audit, or now I'll have to do some extra procedures? My NTE, nature, timing, and extent. Nature, kind of procedures, timing, when to apply those procedures, and extent, how much have to I apply those procedures. So if such kind of situation appears where the company management asks me, please don't ask for confirmation, direct confirmation from this particular creditor or debtor, I get suspicious. Why so? If there are reasonable grounds, I am satisfied that this person is not there, his manager manages the same, he might not be knowing it, he is not that efficient, that person is out of country, when he comes, will tell you, and then you can ask them about the balances. Valid grounds. The trade payables or trade receivables may be requested to confirm the balances either. How can you ask for the direct confirmations? As at the date of the balance sheet. On 31st March, what usually it is 31st March, it could be any date. Balance sheet could be prepared on any day, but in our case, it is a period end, 31st March. As at any other selected date, the auditor can ask for any other selected date, which is reasonably close to the date of the balance sheet. Auditor says, okay, give me balance on that and I'll make the transactional cycle. And I'll see whether the balance on 31st March is appropriate or not. He'll work it upon himself. The date should be decided by the auditor in consultation with the company. Which date? If this is another date instead of the balance sheet. The form of requesting such confirmation. So what kind of form it could be? The form with balance outstanding amount as per the company, wherein the trade receivable or payable is requested to respond whether or not he is in agreement with the balance shown. We send them a form, we write that as per the company's financial statements, Tea and Cookies Private Limited, you owe 5 lakh rupees, or you owe, if it is a trade receivable, if it is a creditor, trade payable, the company owes you 5 lakh rupees. Do you agree to it? He'll reply, the creditor or the debtor will reply, no, I don't agree to it. Yes, I agree to it. It is the same in my books as well. Or what could be the other way? I would send a blank form. I would not mention any amount. And I'll ask the trade receivable or the trade payable, I'll request him to respond me by writing what is the balance with him. What is the balance with him? Once I receive it from the creditor or the debtor, I'll tell it with the books of accounts of the company. Basically, what do the auditors prefer? They set a blank form. Okay, give us what is the balance with respect to Tea and Cookies Private Limited in your books. Send us that. We'll match it with the books of Tea and Cookies Private Limited. Okay? Right? Let's move. Quite easy. I hope you are getting it. Okay. So now we have to select the trade creditors and debtors for sending external confirmations. The point here is, see, abhi direct confirmation procedure hi chal raha hai. The point running is external confirmations only. How do you decide? How do you select whom you have to ask for external confirmation, direct confirmation? The method of selection of the creditors or the debtors to be circularized should not be revealed to the company until the trial balance of the trade payables or receivables ledger is handed over to the auditor. will not say what method we will be choosing to, will be taking up to choose the debtors and creditors will be asking confirmations from until the company gives us a trial balance. It could be a method based upon value. It could be a method based upon the number of orders placed. It could be a method based upon the local people or the far off areas. We can choose any criteria. Any criteria we can choose, right? But we'll not let the company know about it unless and until first we get the trial balance with us. Because from that, we'll be able to see on what parameter basis we have to choose the creditors or the debtors for external confirmations. A list of such accounts selected for confirmation should be given to the company for preparing request letters. The company has to prepare the request letter properly addressed to that creditor or debtor. The auditor should maintain strict control to ensure the correctness and proper dispatch of the request letters, posted by hand, whatever be the means. In the alternative, the auditor may request the client here is the company management, Tea and Cookies Private Limited, to furnish duly authorized confirmation letters, and the auditor may fill the names. So what would the auditor ask the client? Okay, send us some blank formats. Give us some blank formats signed by you of external confirmations. We'll fill in the names ourselves. Whom do we need to send these external confirmations? We'll not hand you over the list. Give us some 10, 20, 30 such kind of external confirmation requests signed by the appropriate authority. We'll fill in the names, address, and amounts, and we'll mail the letters directly. What is important is it should be ensured that the confirmations as well as any undelivered letters are returned to the auditor and not to the client company. Undelivered, unreplied, delivery not taken by the debtor or creditor, they should be returned to the auditor. Because if not returned to the auditor, the companies, even if the people who might get, might be resorting to fraudulent activities, they may fill it, they may sign it, they may agree or disagree to it on behalf of the third parties, the creditor or the debtors, without the auditor's knowledge. So now when such type of external confirmations are received, any discrepancies, means mismatch, revealed by the confirmations or by the additional test carried out by the auditor, may have a bearing on other accounts not included in the original sample. So if there is an adverse impact, the auditor may extend his audit procedures to other accounts as well, which were not chosen in his sample. The entity, the company, should be asked to investigate and reconcile the discrepancies. And the auditor further has to see what tests further he needs to carry out in order to satisfy himself as to the correctness of the trade creditors and trade debtors taken as a whole. What should be his further steps? If everything is okay, everything is fine, he can move ahead. Okay, everything is fine. I need not apply additional procedures. But if there are discrepancies and such discrepancies are of serious nature, I'll have to increase his audit procedures. Sir, what if the debtor knows about audit going on, may lie for the benefit of the company? Basically, we rely upon external confirmations. If they want to lie about it, you can do nothing. You have to rely upon this. This is inherent limitation. You cannot go there and check the accounts. To how many debtors and creditors you will personally go and check. So this is the end of the game. It usually doesn't happen. So now, if no reply is received, the auditor should perform alternate procedures regarding the balances. This could include testing of subsequent payments in respect of trade payables, to whom confirmations were rolled out but no replies received. So 31st March balance, no reply received. We'll check when we are doing audit, April, May. Were there any payments made to those creditors who have not replied after the period end? Agreeing the details of respective balance to the underlying vendor invoices. Okay, we'll now check the vendor invoices. Our alternate procedure, because if they haven't replied us with the confirmation, we have to go for alternate procedure. We cannot wait till long. You cannot wait till death will, okay, reply will come, reply will come. It is not going to happen. मेरे कर्ज अर्जुन आएंगे, नहीं आएंगे तो you should have to go for invoice checking. You cannot wait. Preparing a detailed analysis of the balance and ensuring it consists of identifiable transactions and confirming that these purchases expense transactions actually occurred. Now, what are examination in depth? Examination in depth. Now, invoices, purchase transactions, sampling basis, you will be checking invoices and purchase transactions with the vendor balances. Same case with debtors. You will check for the cash received from those accounts subsequently. And again, examination in debt, you will match them with the sales invoices and the sale transactions. Examination in depth. Okay. If there are any related party payables, for example, you have balances owed to related parties. You have entered into trade transactions with related parties. Related parties as defined by Companies Act. Review whether they were properly authorized and the value of such transactions were at reasonable and at arm's length. For example, the godown is owned by my mother. The godown, and I have to pay rent to my mother. For the similar godown in the market, I can pay 20,000 per month or 50,000 per month. Okay. But if I'm paying it to my mother, I'm paying 1 lakh rupees. So what I'm doing, I'm actually inflating my payment. It is not at arm's length because for the ground of the same godown of the same size and same measurements, I can let it rent it at, get it on rent at 50,000 in the market. And I am paying my mother, my relative, or the director's mother or the director's associate concern, 1 lakh rupees. Why so? Done some market research, will get at lower cost. You have inflated your payment. You have not done a research for getting go down at lower rates of rent. Inflating payments, reducing profits, reducing your taxes. You get trapped under income tax act. So arm's length is important. Review a trend line of purchases, expenses, and accounts payable or a comparison of the two over time. Quarterly comparison, half-yearly comparison, annual comparison to see if there are any unusual trends. Make inquiries for such changes in trends. Now, if there are any related party receivables, review them for collectability as well as whether they were properly authorized and the value of such transactions was at arm's length. Right? To inflate your sales, I sold the tea and cookies to my mother, director's mother. 500 kg, I billed it at 1000 kg, 1000 per kg, just to inflate my sales. The same tea I'm selling to other customers at 500 per kg, but to the director's mother or my mother, I'm selling it at 1000 kg per kg just to inflate my sales. Check that receivables for other than sales or services are not included in the list. Receivables other than sales. It could be anything. For example, loans and advances. Yeah, I've advanced 1 lakh to my mother. She's giving it me back. I've not recorded it as sales. It is a return of money, return of loan. It is a receivable. It was my advance given to my mother, director's mother, the company had given it, whether keeping in mind permitted or not, if it is company's law. That is why I'm taking a normal example, even example. Again, trend lines, you have to review, perform analytical procedures, check for unusual trends and ask for the unusual trends, the reasons for that, maintain your working papers. I hope the existence part is clear. Shubham, could you please take up this question at the end of the session? We'll discuss it, right? At the end of the session, we'll discuss it. General queries, not related to the topic, general queries will take up. Sir, how the auditor will send the letter for confirmation to the debtors of the client? Will he send directly or to the client only send to the client, and how will the annual letter be done? अरे ये तो बोला श्रीराम, क्या हो गया? I said this only. He'll ask for the addresses from them. Or if there is GST number available, you can check it on the GST side, the address. Just ask them, give us the debtors list and the GST numbers. You go to the GST website, with the GST number, you will definitely find the address of the debtor or the creditor. You can mail them directly. And if you are routing it through the client and getting it again, receiving the reply to the client, let it be sealed envelopes. Controls should be effective, strong. Okay. Now completeness. Trade payables and trade receivables that were supposed to be recorded have been recognized as at period. So what cutoff procedures does the auditor need to perform? Let's see trade payables. For the last 5 invoices received or recorded at the end of the reporting date, near the period end date, you receive invoices when you purchase material and which have been included in the trade payables. The goods should have been received. Risk and rewards of ownership in goods should have been transferred in favor of the entity. It should not be a book entry only. Okay. Send me goods anytime. Just give me the invoice. I have to record it in my books of account. Purchase sale is complete when the risk and rewards of ownership in goods have been transferred from the seller to the purchaser. For the last 5 invoices received at period end, I have to check whether the goods are still lying with the creditor, vendor, or they are in transit, or they have reached my godown or my shop. Only then I can include it. If they are in transit, I'll have to show goods in transit. If they have reached my premises, I'll show them as creditors. Because I've received the goods, but the payment I'll be making it in the next year. All goods received prior to the period year end should have been booked in the form of purchases and included in trade creditors. Only the credit purchases, not the cash purchases, okay? Cash purchases is purchases account debit to cash. We are talking here about trade creditors. So credit purchases, credit sales. In the same case, in the case of trade receivables, the last few invoices, cutoff date, goods should have been dispatched and not lying with the company T and Cookies Private Limited. And all dispatched goods prior to period end and properly invoiced should be included in debtors. Ensure that no goods dispatched after the year end have been invoiced and included in debtors for the period under audit. I raised an invoice on 5th of April, dispatched the goods on 6th of April, 7th of April, and including that sales in my previous year, 31st March. That is a sale made during the month of April. Why do I need to include it in 31st March? Increasing my sales, increasing debtor balance. Why do I need to do this? So the auditor has to check this. Yes, Neha, you can say that. Now test the purchases expenses on a sample basis. Selecting the same from accounts, payable ledgers and checking their supporting documents. Purchases were recorded, correct amounts and correct dates. Yeah, basically matching them with the invoices. and the transactions of purchases. Same way, here you have to test the invoices with the receivables account. Select few accounts, few invoices, check the proper documentation, correct amounts have been posted on correct dates. Now match the purchase invoice dates to the gate entry in what? You have purchase material, the vendor will send it to you. Check whether the material which has been invoiced in those last dates, there is an entry in the inward register. It has been received in the shop, showroom, or the factory in the previous year itself. This can include an examination of purchase or expense related invoices received subsequent to the period being audited to see if they should have been included in the period under audit. For example, you received those goods. Now the transporter raises an invoice on you on 2nd or 3rd of April. So we can check, yes, the goods were received. The transporter raised an invoice on 2nd or 3rd of April and we paid it. But the goods were received during the period end. Same way, if you have to check gate entry inward register over here, in the case of debtors for sales, match invoices to shipping dispatch log. The goods have been shipped, dispatched from your factory outward. And we can also check for invoices issued subsequent to the period being audited to see if they should be included in the period under audit. Testing some of the invoices with respect to transactions and then matching those invoices with respect to physical movement of goods. Five invoices, just an example, Karthik. You can check even 50, 30, 40 last invoices. Last 15 days invoices, last 1 month invoices, completely fine. Now, in the case of trade payables, review subsequent expense vouchers. Review all material expense vouchers recorded post the balance sheet date to see if they relate to transactions from within the audit period. The same point, the same expense vouchers we have done. It could be something like the labor expenses to unload the material. Expenses, direct expenses. Now for advance received from customers, sometimes what happens is a customer approaches me and says, I'll be purchasing this much tea and Cookies Private Limited, 100 kg tea from you at April end. Take this advance. Now, if you have received advance, but the risk and ownership has not been transferred, it should be classified as advance only. Advance received from customer, and it is a liability for you because in case you are not able to crack the deal or you are not able to complete your contract, you will have to return that advance. You can only treat that advance as your sales once you transfer the goods to that particular customer. So for advance received from customers, we have to check customer-wise listing, verify if any advances are outstanding beyond 6 months. ऐसा कौन सा customer तो 6 महीने तक सामान ही नहीं लेने आया, has given the money. Inquire entities management if there is any dispute and there is any additional liability like interest on that advance to be given to that particular customer. We have to check the documentation, etc. If there is legal documents available with the company or the documentation on which the entity had received the advance. There could be something, a note, an order note. Now over here, assess, bill and hold sales. If there is a situation where the company is billing customers for sales despite still retaining the goods on site, known as bill and hold. You are billing the customers, but the goods are on hold with you. You're not sending the goods, just billing it. Examine supporting documentation to determine whether a sale has actually taken place or not. Auditor's professional judgment. Here it could be anything, 5 days, 5 invoices, 20. It depends upon the auditor, the professional judgment, his or her criteria. Any parameter, it is just an example, 5 invoices or 5 days invoices. It is just an example. Review the receiving log to see if the company has recorded inordinately large amount of customer returns after the audit period, which would suggest that the company may have shipped more goods near the end of the audit period than what the customers had authorized to inflate the profits of the company. More sales, more profit, showing a better position of the company. The customers had not finalized the order, but you dispatched the goods without their approval at that period end. Now you're getting one order returned on 6th of April, 1 8th of April, 1 10th of April. The auditor should definitely see if there are huge returns in the beginning of the next year, first 15, 20, or even in the month of April. For many of the invoices which were raised in March, this was actually done to inflate the sales. Clear cut, you'll get understanding. Review the process of giving discounts or incentives and check whether the same were given as per the company's policy and general industry trends. 1, 2%, 3%, till 5% upar niche, it's fine, more or less. But it should be as per the company's policy and per the general industry trend. Review credit memos. I told you what is a credit memo. On a sample basis issued during the audit period to see if they were properly authorized and whether they were issued in the correct period. Also review credit memos issued after the period end to see if they relate to transactions belonging to the period under audit. So credit memos the same way issued after the period end. Why had you to issue so many credit memos in April itself? Because you had made fictitious sales or sales without the approval of the customers in the month of March, just to inflate your sales. That is why against the sales return, now you're giving them credit memos. Here, hold sales means you're billing them, but not delivering the material. It is still with you. You are just billing them. You are just billing the customers, invoicing, sending invoices, preparing and sending invoices, and you will send the goods after a certain period of time. What happens is, near the end date, what do? If they want to inflate sales, they issue so many bills to many customers and inflate the sales, show high profits, good position of the company. And when the next year starts, the bills are adjusted against the credit memos. And the goods still lie with the company only. They don't actually, the physical delivery of the goods doesn't take place. Only book entries happen. That is bill and hold. Aditya, I've just got this one. Are my questions reaching you? Since the past, sometime I've got this one only. Sir, are my questions reaching you now only? Aditi? 3 times. Now we are with other current liabilities. What are the other current liabilities? Statutory dues like TDS, GST. So we have deducted tax. I hope you know about TDS on certain of our expenses. We have utilized our ITC, but now since our sales were higher and our output tax liability is higher, so we have to pay GST. These kind of taxes, payable, not payable, professional tax, provident fund on your employee's salary, ESI. So we have to check that with respect to sales, purchases, employee benefit expenses, respectively. Here is an example. GST liability for the last month may be calculated by either applying the applicable rate to the sales made in the month of March. 10 lakh sales, 5% GST, 50,000 is the liability. Now we'll check what amount of balance of ITC was available on 1st March or during the month of March while paying the output liability. So after set off, this much 30,000 was available at ITC, 20,000 was payable on 31st March. In case of any variance as calculated by you and as recorded by entity, reasons for variance should be requested from the client, and if found satisfactory, the same should be maintained as part of audit documentation. Similarly, provident fund liability for the last month can be calculated by applying the applicable rate to employee benefit expense, salaries, wages, and in case of any variance, you have to ask the management of the reasons. Further, the auditor should obtain and verify the challans for deposits made to subsequent to the period end. For example, there was a payable outstanding expense of like GST, EPF, ESI on 31st March. But obviously, it is a payable on 31st March. It would have been paid in the month of April or May as per its due dates. The auditor should always ask for the challans, whether they have been actually paid or not. They are still standing as payable. And if the amounts have not been deposited yet, the auditor has to report it under CARO. There is a specific point whether the company has paid all its statutory dues pertaining to the previous year. If not paid, we have to mention it in our company audit report, CARO point. For example, the EPF ESI date is usually 15th of the next month. The TDS date is usually the 7th of the next month. The GST date is 20th, 24th of the next month. So whether the company, the TDS is for March and it is 30th April. So whether the same has been paid by the company or not. Now we were talking about the aging schedule. We are at valuation. Let me see if there are doubts. Is the video clear? Please let me know. Banreddy says the video and audio got paused. Are you able to see me, hear me? Am I visible? Am I audible? Well, during the virtual classes in the lockdown period, this was a hot question during all the virtual classes in the lockdown period. Now we are also virtual. So the virtual trend started in the lockdown itself. So sometimes you would say, yeah, am I visible? Am I edible? Instead of audible, the slip of tongue would say, am I edible? Okay, it says clear, sir, no issues. Audio, okay. Chaliye. Review the process followed by the company to identify if any old creditor balance liability needs to be written back. The question asked by Shriram. This will include a consistency comparison with the method used in the last year and a determination of whether the method is appropriate for underlying business environment. Written back means, write back means any creditor balance you have to write it back means you are writing it off from the books. Obtain the aging of payable balances like 30 days, 30 to 60 days old, 60 to 180. Like see, here it is in the screenshot. Here it is. I'll show you in the balance sheet also. Also obtain the list of vendors with whom the company has disputes and any claims from customers under litigation and compare with previous year. Quite normal. Right? So here what we review? Provision for or allowance for doubtful debts. What process is the company following? 5%, 10%? What estimates is it using? On what factors is it making provision? And are such estimates consistent? The methods used year after year, are they consistent with each other or they are changing? The company is changing the method every year of estimating provision for doubtful debts. Again, aging report of accounts receivable, 30 days old, 30 to 60 days old, more than 60 days old, 180 to 365, and more than 365 days old. Classification accordingly. Check that write-backs in the liability balances no longer payable have been approved by an authorized member of senior management like the CEO or MD of the company. And foreign currency trade payables have been done properly in accordance with AS 11. Foreign currency trade payables, they have been restated on the balance sheet date as per AS 11 rules. Understand management's process to identify the principal amount and interest due thereon, if any, remaining any paid to micro, small, and medium-sized enterprises, suppliers at the end of the accounting period. MSME suppliers, small suppliers, micro suppliers, small and medium. I hope you know about MSME. So there is a provision in the law specifically with respect to government is very sensitive. Law is very sensitive with respect to MSME suppliers, providing protection to MSME suppliers in the form of audit reporting. Whether the management has segregated the trade amounts payable to MSME suppliers, and if they are late, delayed, interest payable to them has been properly accounted for. The auditor has to check this process. Over here, we have to check, obtain a list of debtors under litigation, compare with previous year. Scrutinize the analysis and identify those debtors which appear doubtful. Discuss with management. These appear to be doubtful. Why are you still showing it under accounts receivable? They have been making defaults year after year. Why don't you include it in the provision for bad debts? Make a higher provision on them. Check for the disputes. Where there are disputes with our debtors, there are chances that we'll not get the money. Check in depth. Provisions are made at appropriate rates. Prepare schedule of movement of bad debts. Provision accounts and debts written off and compare the proportion of bad debt expense to sales for the current year. How many bad debts have incurred as a percentage of total sales as in the previous year or 2 years back? Are the bad debts increasing? Is the company making provision accordingly, increasing the provision? And if the provisions have to be increased by percentage, initially it was 5, then 10, now 20, 25% provisions company making. Why is it so? Don't they know how to do business? Why are the debtors accumulating and they are making higher provision on doubtful debts? Stop dealing with those kinds of people, those kind of customers. Check that write-offs are properly authorized, bad debts which have been written off from the books. Yes, larger visible. Goods sold on sale or return basis, Aditi, we covered it in profit and loss account. Write back is writing off. Yeah, Aditi, because sales is trade receivables and purchase is trade creditors. Now we are done with existence, we are done with completeness, we are done with valuation, now disclosure. So what is disclosure in case of trade receivables? Properly restated as per AS 11, the debtors and related party transactions have been properly disclosed. Now in case of trade payables, the liability should be in the normal course of the business against purchases or expenses. Principal amount and interest due to MSME creditors. And interest is a very important point with respect to MSME. Because the law wants the auditor to make sure they are not defaulting on payment to MSMEs. MSMEs in trade receivables, okay, fine, but in trade payables, it is a sensitive category. The management has to disclose how much amount is pending, what amount of interest is pending toward MSME. And the auditor has to check this, whether the management has properly disclosed it or not. Interest, amount of interest due and payable, amount of interest accrued and remaining unpaid, amount of interest further remaining due and unpaid even in the succeeding years. Now the amount of interest still running unpaid from the previous some years. The first part is due and payable for the period. The second is remaining unpaid at the end of accounting year. So during the year, payable, and still in the second phase remaining unpaid at the end of the year. Third year is remaining unpaid year after year. This has to be disclosed, and auditor needs to know the reason for this. Why are you not paying the balances or the interest to these MSMEs? You know, there is a provision in GST you might have read that you will not get ITC for the goods purchased from MSMEs if you don't make the payment within 6 months. I hope all who have read GST must know about this point. Another disclosure in case of debtors is transactions with parties covered under Section 189 of the Companies Act are reported properly in the CARO report. The auditor has to report. You will study in the audit report chapter, Companies Audit Report Order 2020. This is a part of your audit report. So what is Section 189 about? Register, maintaining a register with respect to contractual agreement with directors and related parties. This has to be disclosed under trade receivables. If they owe you some money, if they owe money to the company. You'll see, you can have a look on a trade payables aging schedule and trade receivables aging schedule. Yes, Nilabjo, credit memo, credit note, one and the same thing. No, Shriram, free samples would not affect trade receivables. They would affect the stock and the purchases. You'll have to check through them. Inventories. Yes, Hitesh. Yes, good. Yes, Nilabjo, you can. Yes, Nilabjo, you can. Now, trade receivables have to be disclosed. Secured considered good. Unsecured considered good. Doubtful. Allowance you have made for doubtful debts. Debts due by directors or other officers of the company, either severally or jointly with any other person. Firms or private companies, respectively, in which any director is a partner or a director or a member, should be separately stated. Quite obvious. Now, other current liabilities like your statutory dues, PF, ESI, TDS. So what could be the other current liabilities? Current maturities of finance lease obligations. For example, there is a loan of 5 years and installments due in the next 12 months could be classified over here. 12 months condition. Interest accrued but not due on borrowings. Interest accrued and due on borrowings. Income received in advance, unpaid dividends. Application money received for allotment of securities and due for refund and interest accrued thereon. I hope you all know about this. You have to return the application money if you're not allotting the securities. Right? The whole story is written over here, which you already know about. Unpaid matured deposits, debentures, which are due to be paid soon within 12 months. Unpaid matured debentures and interest accrued thereon. Others, you have to specify the nature. This is disclosure with respect to other current liabilities. Yes, Bandreddy, right. MSMEs are the soul. Okay. Trade payables, receivables. Any point, any doubt? We'll move to paisa, rokda, cash, dhan. Any point to be taken up in trade receivables and creditors? I hope it was fine taking them side by side. Need not read them individually one by one. That is why I took them side by side to give a better clarity and a comparison. Depends, Aditi, if they have been sold on cash. So see, goods sold on sales or return basis, they are shown separately in your trading account because it is not yet a sale. Only when the purchaser gives you a note that yes, The goods are as per the quality I have asked for. You can record it as sales. I have recorded it as purchases. You remember final accounts, you would show it as a separate item in your trading account. Goods sold on sale or return basis. Stock lying with customers, stock lying with us. I hope you could recall that. I hope, Aditi, that's clear. Kerala are not able to understand MSME point. MSME is like MSME as micro, small, and middle enterprises on the basis of investment and turnover. Investment in their business and turnover. There are different categories: micro, small, and medium enterprises. So mostly businessmen in our country, small businessmen are MSMEs, and government wants to take care of them, and that is why governments have come up with so many protections for them. One of them is the MSME Act, whereby if you make a default of payment to any MSME businessman like Udyog Aadhaar, you have heard about Udyog Aadhaar certificate. So if you are holding that certificate, you are MSME registered, and any of your debtor makes a default of payment to you, you can file a case upon him. Or if there is a delay in payment, you make a delay in payment to payment of any MSME, you have to give it with interest. अरे आराधना मेरे को जाने तो दो तुम पहली भाग पड़ी. Okay, fine. I hope Nilabjo, the experiment was good. Thank you. Okay, cash and cash equivalents. You all have done CFS, cash flow statement. I need not tell you what is the difference between cash and cash equivalent. Cash equivalents are your investment securities which are readily convertible into cash, liquid, known as liquid money. So cash and cash equivalents, what are cash equivalents? Cash equivalents represent the most liquid assets of an enterprise, readily convertible into cash and subject to insignificant value risk. Insignificant value risk means up and down in value. There is no up and down in value. Whatever value it carries, you will get that value, whatever be the market scenario. Cash in hand, stamps in hand. Obviously, the stamp you have in hand, 1 rupee, 2 rupee, 10 rupee, whatever you have, it carries the same value. The value doesn't get decreased. Balances held with bank in current accounts, cash credit accounts. You'll read about it in your banking chapter. What are cash credit and debit balance of cash credit account is actually an asset, not the credit. Credit is a borrowing. Fixed deposits, checks in hand. Utmost professional skepticism needs to be exercised while auditing such balances, as they are prone to misappropriation. You have read about misappropriation of cash in your chapter 5, fraud, and the responsibility is the auditor with respect to fraud. Okay, Bandreddy says, I have MSME certificate. Good, good. What is professional skepticism? भूल गया मैं. Tell me. Shriram in case of bank overdraft as well. The same case as CC. What is professional skepticism? Short-term memory loss. I cannot remember. Could you please remind me what was professional skepticism? Good, Purnima. The two words, questioning mind. Good, questioning mind. Okay, so this is cash. Over here, as you can see in the picture, this is cash equivalents. So how you establish the existence of cash and cash equivalents? Special care is necessary in regard to verification of cash balances. You have to check them by surprise. Anytime during the day, at the period end, day end, you can ask for cash. Okay. Cash. What is the cash in your cash box, drawer, galla, whatever you call it? Sir, 50,000 पड़े. Okay, गिन के दिखाओ. He'll count. देखिए, 1, 2, 3, 50,000. Okay, stop it. Give me the money. I'll take some out of it. Keep it confidential with me, and I'll say, You count yours, I'll count mine, and then let's see how much cash in total you have. This is something a physical procedure, like we usually do while auditing cash. So the cash should be checked not only on the last day of the year, but also checked again sometime after the close of the year without giving notice about your visit. Surprise check. If there are more than one cash balances, example, cashier, petty cashier, branch cashier, impressed balances with employees, all of them should be checked simultaneously. Because so that if you're checking it turn by turn, okay, cashier come over here, petty cashier. Meanwhile, you are asking for petty cashier and the cashier goes from the back and okay, keep my balance. If your balance is low, they are all involved in a fraud. So check them simultaneously. Tere paas kitna, tere paas kitna, tere paas kitna. How much do you have? Show me. It is desirable for the cashier to be present while cash is being counted, and he should be made to sign the statement prepared containing details of the cash balance counted with the denomination of cash, how many 2000 rupee notes, 500 rupee notes, 100 rupee notes, coins and all. If he is absent at the time of the cash being verified, he may hold the auditor responsible for the shortage. I was not there. The auditor might have stolen some cash. You have to make him sign a statement. You are here. This much is the cash. This is with you. Sign it. Audit evidence. Occasional, yes. It could be for day-to-day expenses, right? Allowances are their expenses. Like for tea, okay, for posting, for stationery. So the allowances could be an example. Okay, Kashmir, allowances could be an example for office work. It could be. Direct confirmation procedure, we have read about this. Significant and important activity. Whom do we need to ask? The banker certificate, the bank statement, the bank balance at the end. Now, in this case, it is not the debtor, it is not the creditor, but we are sending the confirmation to the bank, right? Or asking for a bank confirmation. What can we do? We can ask for a bank statement or directly log in online to the company's account. We can ask the cashier or the person who is authorized, okay, log in online, show us the balance on 31st March using the appropriate option. App pe dikha do, application pe dikha do, online dikha do. If not possible, sending the audit team member to the bank branch along with the entity's personal request to obtain balance confirmation from the bank directly. Usually the first one is preferred. Completeness. Balances that were supposed to be recorded have been recorded properly. If there is any rough cash book or separately kept cash book, we have to check for reconciliation of entries. If auditor finds any slip checked in respect of temporary advances paid to the employees included as part of cash balance, he should check whether those are approved by an authorized official and recorded in the appropriate accounts. What is IOU? Does anybody know? What is an IOU? The auditor should also perform a cash sensitivity analysis by compiling a summary of total cash receipts and payments each month and analyzing the trend. What is cash sensitivity analysis? To analyze the trend for variation in specific month expenses, cash movements. BRS, the bank reconciliation statement, the first accounting love of any commerce student. Bank reconciliation statement, the first chapter they would do after learning all the basics of accounts. If there are any differences with the bank balances, you'll have to check for the BRS, ask the client's management to get the BRS prepared, signed by the authorized personnel, and any differences should be properly accounted for. Yes, if we are done, we are going to done. We soon be over with cash. Then we'll take a break. Just give me a sec. Okay, right? Okay. Siddharth, your this comment is visible. Sir, are my comments visible? Siddharth, this one was visible. Yes, IOU means in short IOU. I for I, O for OWE, O, U for YOUU. So IOU, these kind of slips. Now, this is an important question for descriptive type as well. How do you need to verify the BRS as an auditor? Telling the balance as per bank book to the bank confirmation statement, checking all reconciling items under included checks issued but presented for payment. Basically, whatever, how do we use to prepare the BRS? The auditor has to check each and every step, right? Check deposited but not credited. Bank amount, bank charges, debited, credited, bank interest, all this. I think we have done this in our initial levels. But this is an important part that for verification of BRS, what should be the auditor's procedures? Siddharth, depends upon the what the question is asking you. If the question is want some answers from me, you cannot club anything. How are cash and cash equivalents valued? All bank accounts, including foreign currency, have been restated at the closing exchange rates as applicable. Presentation and disclosure for cash and cash equivalents, the shortest one. Balances with banks, checks and drafts on hand, cash on hand, others, earmarked balances with banks. For example, this is some balance deposited in the banks for the dividend to be paid. Balances with the banks to be held as margin money or security against the borrowings, guarantees, repatriation restrictions. Bank deposits with more than 12 months maturity shall be disclosed separately. Repatriation is if you're sending money to somewhere else, for example, outside the country. Margin money is the money which the bank asks you to keep it in your account anytime during the year. It could be against borrowings. For example, private banks ask you to keep a minimum average balance. Average minimum balance, right? And okay. Fine. Okay. Let me see. Yes, Hitesh, with the approval of the appropriate authorities at the client's place. Earmarked means specifically marked for that purpose. For example, you have opened a bank account. You know that for paying dividend, you open a separate bank account and you have to deposit all the dividend into that account. That account's money cannot be used for any other purpose. So it's like you have specifically categorized it and marked it. Earmarked means marking it that it should be used only for that purpose, not any other purpose. Aradhana, escrow account. Escrow account is something like there is a mediator or a third person who is maintaining account on the basis of for two on the behalf of two parties dealing with each other. I hope I'm clear with the cash. It was the easiest part. Cash was the easiest part, and it is the most interesting part while auditing. Okay, so we are left with the last two parts of this chapter: inventories in part three, balance sheet, of course, the miscellaneous part as well, and provisions and contingent liabilities. So let us take a break for 10 minutes, and during the break, what you all have to do from the portal where you download your notes and practice questions, you'll find a file, integrated case scenario, chapter 9, only case study. Download that. We are going to use that for your test today, the final test for chapter 9. I don't want to hear that, sir, download new one, network come hai, the file is not there, everything. The file is there. So please download it from there in the break or by the end of the session so that you don't lose to practice while today's test. Okay? Right? Okay, let's take a break for 10 minutes, guys. Please. Okay, are we all back? People, come on. Give me a hi if you're back. Arey, what has happened? Okay, okay. Hiral, repatriation restriction is when you have to transfer money from one place to another, specifically in case of inter-country transfers. So there are restrictions put on by the law of those countries, like in India, RBI, FEMA restrictions. You might have read or you might have watched it in the news just few days back. So the limit for this transfer of money from outside to India has been increased. You can take this much dollars with you while on a foreign trip, or you can transfer this much money at one time outside the country. Those are repatriation restrictions. You would have read about repatriation in your residential status chapter in income tax. I hope, Hiral, I'm clear. Okay. Are your networks working fine? Then what will be your performance during the test? I haven't seen a response or query from Aditi, Karthik since long. No, Aditi's was at 7:24. Shriram is there, Banreddy is there, Rahul, Karthik, Gihani. Where are you people? Are you there? Okay. We all know what are inventories. Current assets held for sale. Obviously, sale, stock in the ordinary course of business means naturally, ordinary course of business for what we are doing business, or in the process of production. So, production in the process, you are holding raw material stock for sale or consumption in the production of goods or services for sale. Basically, what it's trying to say, it's trying to say raw material, work in progress, finished goods, or in the form of materials or supplies to be consumed in the production process or rendering of services. AS2 holds inventory is valued at lower of cost or NRV. It should be applied consistently year after year. So if there is any change in accounting policy with respect to your valuation of inventory, okay, you should adequately disclose it in financial statements. How do you check for the existence of inventory? Inventory count, best way, right? You'll have to check what is the entity's plan for performing inventory count. How is the entity going to perform inventory count, or how does the entity usually perform inventory count? Ensure that the goods consigned have been segregated in books, obviously, that have been consigned. Consignment stock is separately accounted for. Auditor should participate in the inventory count with the management. Obviously, you'll have to participate, but it doesn't mean that there is heaps of gunny bags lying in the godown and the auditor himself or herself is just counting, jumping from one gunny bag to heap of to another. No, you'll have to take the help of management and their office boys, their people. You just have to observe the inventory count on paper, right? When the entity uses periodic system of inventory count, it should be undertaken at the end of the period. That means inventory is counted after certain intervals. If it uses perpetual system, perpetual means continuous. You might have read it in costing. Continuous updation of inventory real time, even for 1 unit. Inventory can be counted at any time, any date. We also need to confirm or investigate if any inventory of the entity is lying with a third party. For example, job work. We have sent our raw material or our finished product clothes to the factory of job worker to do some job work on it in the process of production or material over there. So if there is our material lying with a third party, for example, a job worker, we have to check whether it is included in our financial statements or not. Yes, Pooja, it is reaching me. Yes, Pooja, I got it very. Okay. Test count, very important. The test counts of inventory by auditor should include observing employees whether they are adhering to the agreed plan, they are moving, they are counting the inventory as per the plan agreed between the company and the auditor. The auditor said, we'll count the inventory by ABC. High value items, then medium value items, and low value items. But the employee says, okay, this is A, this is B, this is C, again, this is A, this is B, this is... We agreed over a plan, buddy. A value items first, then B value, then C value. Assuring that all items are properly tagged. Obviously, only then you'll be able to check for the specific number given to that, specific code given to that inventory. Assuring that there is appropriate supervision on the count procedure. Some supervisor is there. Observing that proper amounts are shown on tags, 1 box, 2 box, 2 kg, 3 kg. Determining that tags and summary sheets are controlled and reconciled. Reconciliation of test counts with tags and summary sheets. Summary sheets could be generated from the entity's software, Excel sheet, which is in books, physically present, and reconciliations to be checked and summarized. Staying alert at all times and specifically being cautious about empty boxes and obsolete items. So empty boxes should be discarded because they could be packed and shown, oh, okay, there is a box over there. Then performing cutoff testing by documenting last 5 to 10 receiving reports, shipping documents, ensuring inclusion of third parties recorded in the financial statements. They do not include any inventories that belong to third parties, but do include inventories owned by the entity and lying with the third party. किसी और का सामान हमारे पास है वो काउंट नहीं होगा, पर हमारा स्टॉक किसी और के पास है वो काउंट होगा. Someone else's stock, third party stock is with us. It will not be counted in our entry. We might be the custodian of that stock for temporary time. But if our stock is lying with a third party, that will be counted in our inventory because we own it. The risk is ours. So what do we need to do? Completion, perform analytical procedures for assuring the quantity of the stock. Well compute inventory turnover ratio, inventory to total assets at any time during the year, compare them with previous trends, budgetary expectations versus actuals, that they had budgeted will be acquiring this much stock, this much would be sold, this would be the stock movement. Does the stock represent the stock movement actually budgeted? Examine non-financial information related to inventory such as weights and other measurements, very important. Perform purchase and sales cutoff tests. They will tell you about inventory movement. Shipping documents, inward register. With respect to tagged entry, perform tests of omitted transactions and tests for invalid transactions. Sometimes when you go to a departmental store, what do? They make the bill with the scanning machine. The scanning machine scans the tags on the goods purchased from their store. Sometimes they say, okay, sir, this is not working. We cannot sell it to you right now because these particular tags are still to be recorded in our system. This is a new delivery which has new material which we have received today. Some tea, some cookie boxes we have received today only, and they are still to be updated in the system. So this can't be sold today. The system is not picking it up, the tag. They will be sold tomorrow. Verify the clerical and arithmetical accuracy of inventory listings. Reconcile physical inventory amounts with perpetual records. Reconcile physical accounts with general ledger, control totals. Different accounts to be reconciled with each other. Reconcile inventories which belong to client but are held with third parties like transporters, warehouses, port authorities in case of import and export. Goods received on consignment basis have been properly segregated from other items of inventory because they have been received on consignment. We don't own them. They are someone else's property. These are consignment goods. Auditor can observe the physical counting. He need not do it himself. He can be present over there. The management staff, the employees will conduct the physical counting. Auditor will observe whether it is being done properly or not. Yes, Pooja, certainly. Yes, serial barcode, one and the same thing. Okay, this needs to be changed over here. I'll change. It is inventories. Right? This has to be inventories. It was cash and cash equivalents. So depending how the business operates, the management may use FIFO, LIFO, weighted average, and LIFO is actually not followed in India. So we can use FIFO or weighted average basis. For raw materials, you might have read it in costing. You have to include direct expenses, carriage import, non-refundable duties for which you don't get the credit. If standard costs are used, inquire into basis. What basis of standard costing? Analyze the variances, standard costing chapter. Test check cost prices used with purchase invoices received in the month prior to counting. So what is the cost? What cost has been booked in the books of accounts and what is the amount on the invoices? If there are any variations. Follow up the valuation of damaged or obsolete stock during observance of physical counting. If they have to be shown at net realizable value instead of their cost or NRV, whichever is lower. For work in progress, we have to understand the various stages of production and how is the value being calculated, what elements of cost are included, direct material, direct labor, direct expenses, the level of factory overheads reached. Ensure that material costs exclude any abnormal wastage factors. Normal wastage is allowed, but abnormal should be deducted from the price. You would have read it in loss of like stock policy questions in accounting. Treatment of normal and abnormal loss in final accounts as well. For finished goods and goods for resale, resale means you are trading. You have purchased the goods and you are selling it further. That is resale. For finished goods, as it you have manufactured it in your factory. The component of cost, whether valued at cost or NRV, follow for obsolete, damaged, and slow moving items of finished goods, and making an inventory aging schedule. How old is the inventory with you in the godown, in the shop, in the showroom? Quite normal points, but specific, different from each other. Compare recorded cost with replacement cost if you have to replace an inventory. Damaged. Examine vendor price list to determine if recorded cost is less than current prices. Why is it so? Current price is this much. Why have we recorded at lower cost? Was it purchased at that time when the prices were low? Calculate inventory turnover ratio to check the stock velocity. Obsolete inventory may be relieved. Obsolete inventory may be revealed if ratio is significantly lower. In manufacturing environments, test overhead allocation routes and ensure that only direct labor, direct material, and overhead have been included in the cost of the material. Verify the correct application of lower of cost or net realizable value principles. Hiral, you have gone through the case study? Okay. Now, entity has valid legal ownership rights over the inventories claimed to be held by the entity. You have to check them with purchases, documentation, check whether the goods are consigned or not, client correspondence, direct confirmation from the client that yes, goods dispatched, goods were received, review consignment agreements, review material purchase agreements, contracts, examine invoices for evidence of ownership. Invoices shall be in the name of the client. External confirmation as per SA 501. For instances of inventory held by third party like port authorities, warehouse, or some other person, the auditor should insist on obtaining declaration from the third party, the warehouse keeper, on the business letterhead and signed by an authorized personnel of that third party, confirming that this much inventory of this much value they have stored with us as per our agreement, and they are paying us this much amount per month. We are holding this inventory on behalf of Tea and Cookies Private Limited, and we need a direct confirmation certificate. Presentation and disclosure, the last suggestion. Again, I'll change it over here. I forgot to change it while copying inventories. Whether inventory has been classified as raw material, work in progress, finished goods, stock in trade, stores and spares, loose tools, specify nature accordingly. Whether goods in transit have been disclosed separately under each subhead of inventories. Each subhead. This is a subhead. Okay. Mode of valuation shall be stated. Any doubt in inventories? Yes, Siddharth. Had I given the questions, had I given you the questions, the test would have been done by now. That is an element of surprise. How I'm going to mark you people, give you marks. It is an individual test for the day. That is why I have not given you the questions. That is an element of surprise. Yes, Pooja, very well said. The last part and the last head of chapter number 9, provisions and contingent liabilities. And you all know, you all have read about provisions and contingent liabilities, right? A provision is a liability which can be measured by using a substantial degree of estimation, provision for doubtful debts, provision for taxation. Collateral agreement, Hiral, like you have hypothecated your stock against borrowings. Collateral agreement where you have used your stock as collateral security against a loan. in case you make a default, the bank will have a lien on your stock. A provision is recognized when an entity has a present obligation, either legal or from facts of any case constructive, as a result of a past event. Because of a past event, there is a present obligation. It is probable that an outflow of resources with economic benefits will be required to settle this obligation, the obligation which is present as a result of past event. And we can make a reliable means that could be accurate, near to accurate estimate of that outflow of obligation. If these three conditions are met, only then there is an and, then the obligation is a provision. Otherwise, no provision is recognized. If these conditions are not met, no provision should be recognized. For example, provision may include provision for litigation against court cases, provision for warranties, etc. Now, what is a contingent liability? Again, it is also a possible obligation that arises from past events and whose existence will be confirmed by only occurrence or non-occurrence of one occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Now here it is an or a present, so an obligation, past event, but its existence will depend upon a future event, occurrence or non-occurrence of a certain or uncertain future event. One or more uncertain, not certain, uncertain. It is not recognized because it is not probable that an outflow of resources would occur. The amount cannot be measured with sufficient liability. So any of these conditions not met, it becomes a contingent liability. Otherwise, it is a provision. For example, Tea and Cookies Private Limited is fighting a court case in the court of law, a legal dispute. And there is a high probability that the company will have to pay damages to one of its vendors. So it will create a provision for litigation. Estimately that this much amount might have to shell out. It is a present obligation, court case, result of past event, some dispute. It is probable that court is going to rule against us, and we can reliably estimate that we might have to pay 5 lakh plus this much interest to the vendor. But in case we are giving a strong fight, our case is strong, it cannot be estimated that either we are going to win or we are going to lose. So probability is quite less. Depends upon, as a result of past event, there is a possible obligation, but depends upon the court ruling of future. Or we cannot actually be sure whether we'll have to pay or what amount we'll have to pay. Then it is a contingent liability. Shriram, that depends upon case to case, whether loose tools are a part of asset or inventory. Usually they are a part of inventory, depends upon case to case and the types of fixed assets and inventory the current company is maintaining. AS29 basically, obtain existence, obtain a list of all provisions, compare the balances with the ledger, inspect the underlying agreements with customers like warranty schemes, warranty commitments, any legal litigations, obtain the underlying working and the basis for each of the provisions made. How have you worked on for the amount of the provision, and check whether it is complete and accurate. If you require an expert's opinion or report to be assured of the provision amount, example for warranty involving complex calculations, then you can request the management to get it done for you. And on the basis of that legal assessment, for example, a legal assessment of the damages you might have to pay to the vendor against whom you might lose the case. So provisions that were supposed to be recorded have been recorded as per SA 500 audit evidence issued by ICI. While using the management's experts' work, audit evidence should include competence, capabilities, and objectivity of the expert. Skilled, what can he do? How objectively he can do your work? How precisely? Check whether he's not employed by the entity, he's an outside party, he's independent of the client, T and Cook is Private Limited. Auditor has a good experience with him in the past with respect to his work. And knowledge of the expert, his qualification membership. I think AS20 expert essay you would have done. Obtaining the understanding of the work of the expert, whether the auditor has that expertise, he can evaluate the work of the expert, or he can directly rely upon it. He need not evaluate it. Assumptions and methods used by management, nature of internal and external data used by the expert. For valuing the provisions, evaluate the appropriateness of external auditors' work as evidence of relevant assertion, reasonableness of the data and findings of the expert, relevance, completeness, and accuracy of the source data used by the expert, written representation from the management that the entity has made all the provisions which were required to be made as per the recognized accounting principles. Presentation and disclosure for provisions and contingent liabilities. I would have to change all this. Only then I'll upload the notes, okay? That is why I don't upload the notes initially before the session. Such kind of clerical errors happen, and that can be amended afterwards. So long-term provisions are provision for employee benefits, PF, ESI, gratuity funds, others. Short-term provisions, same category, due, gratuity fund due in the next 12 months, people would be retiring, or somebody has taken VRS, so you have to pay them as soon as possible within the time period, the policy of the company. This was our provisions. Now, contingent liabilities and commitments. Contingent liabilities shall be classified as claims against the company still not acknowledged as debt, guarantees given by the company, other money for which the company is contingently liable. Contingent means depends upon the occurrence or non-occurrence of a future uncertain event. Commitments given by the company, for example, work commitments in case of works contract, uncalled liability on shares and other investments partly held, other commitments. Disclosures with respect to provisions, contingent liabilities, and contingent assets. For each class of provision, investment shall disclose the carrying amount, beginning and end, additional provisions made during the year, amounts utilized out of the provisions, that is, amount charged against the provision. For example, provision for doubtful debts against bad debts, unused amounts reversed during the period. Then, brief description of the nature of obligation, an indication of the certainty or uncertainty, timing of outflow, the amount, what could be the expected amount. Then, unless the possibility of an outflow in settlement is remote, an enterprise to disclose for each class of contingent liability. If it is not remote, you have to disclose for each class of contingent liability a brief description, the estimate, indication of uncertainty, possibility of any reimbursement. AS29. AS29, right? I hope I'm clear. Part 3 finished. Part 3 finished. Now we can move to Part 4, miscellaneous. Okay, let's move to miscellaneous part. This was all all heads covered from the financial statements. You have successfully completed your chapter 9. Congratulations. You're ready for the test. Okay. Part 4 is miscellaneous. These have been responsibilities have been put on the management, and the auditor also has to check this whether these disclosures and notes are being made a part of the disclosures along with the financial statements by the company or not. Right? It was last but ready. This is a miscellaneous part. Come on. You all know what corporate social responsibilities? We are using the society's resources. We owe some responsibility, some duty towards the society. So a responsibility has been cast upon the corporates by the law, known as corporate social responsibility. Under section 135, you might have watched certain advertisements on TV as well. Buy this product and ₹1 will be contributed towards this from your purchase. So what does the company have to disclose under corporate social responsibility to the companies on whom section 135 applies? There is a condition, applicability provision under section 135. CSR doesn't apply to every company. So what disclosures they have to give? Amount required to be spent by the company during the year. Do you remember? Somewhere 2% of the net profits of the past average years. Amount of expenditure to be spent, amount of expenditure incurred. Shortfall at the end of the year. You were supposed to spend 2 lakh rupees and you have spent only 1,90,000 rupees. Total of previous year's shortfall. Reason for shortfall. Previous years means from 2 to 3 years, you have been incurring a shortfall, 5,000, 10,000, now total it has been 30,000. Nature of CSR activities, if you could understand, and the Companies Act, there is an activity schedule which lists out what are corporate social responsibility activities which the corporates can undertake. They cannot undertake any activity and term it as CSR. There is a proper list, and you have to take up activities as per that list. Details of related party transactions where CSR has been a part. For example, you have contributed to a trust controlled by the company in relation to CSR expenditure. So if a provision is made with respect to a liability incurred by entering into a contractual obligation, the movements in the provision during the year should be shown separately as far as CSR expense is concerned. Okay. Second part, it says this year, from this year onwards, depending upon the total income of the company, the figures appearing in the financial statements shall be rounded off as given below. If the total income, initially it used to be turnover of the company, but now receipts of the company, but now it is total income of the company. If the total income of the company is less than 100 crore rupees, you will round out to the nearest hundreds, thousands, lakhs, millions, as per the case. If it is that income is 100 crore rupees or more, to the nearest lakhs, millions or crores. Hazar or 100 उड़ा दिए उन्होंने. Once a unit of measurement is used, whether hundreds, thousands, lakhs, millions, decimals, whatever be the case, millions, it should be used uniformly in all the financial statements. Throughout the enterprise, all the P&L, balance sheet, cash flow, uniformly in all the financial statements. Yes, Bandreddy. Details of Benami property. What is Benami property? You can see in this picture over here. This is the person, Benamidar. He has no name. He buys a property. Property is bought. The benefits of the property are given to the real owner. Gives black money to buy property. So what happens? This real owner who wants to buy property, He gives black money to this person, Benami, who is not traceable, untraceable. Basically, a fictitious person. This person buys the property. The real owner who has given the black money enjoys the property. So, Benami Property Transactions Prohibition Act 1988, where any proceedings have been initiated or pending against the company for holding any Benami property under this act, what should the company disclose? If there are any proceedings which have been initiated or they are pending against the company, only in that case, details of such property and the year of acquisition when the company acquired this property, amount thereof, details of who all the beneficiaries have been. If property is in the books, then give a proper reference. If property is not accounted for in the books, omitted, kept out of books, this fact to be mentioned therein. Where there are proceedings within the company under this law as an abettor of the transaction or as a transferor, then the details shall be provided. Nature of proceeding, status of same, and companies doing the same. What do you mean by abettor of the transaction or as a transferor? Then the details shall be provided. Okay. Tell me. There are many, Kushi, many. There are many. Okay. Yes. So abettor means he just supported a transaction, initiated a transaction. He was a driving force. The company was a driving force. Someone else was involved in the Benami transaction, but the company was a driving force. Yeah, helping in the transaction. Akash, very good. Relationship with struck off companies. The next disclosure, where the company has any transactions with the companies struck off under Section 248 of the Companies Act or Section 560 of the Companies Act 1956. The company shall disclose name of the struck off company here, serial number wise. Nature of transactions with the struck off company, whether you have invested in the securities, you have receivables against the company, payables against the company, shares held by struck off companies. The struck off company holds shares of Tea and Cookies Private Limited, any other outstanding balance. In this column, you have to give balance outstanding. And if there is any relationship with the struck off company, associate concern, sister concern, you have to disclose it over here. But ready, it is not about disclosing about Benami property. It's written over here, where any proceedings have been initiated or pending. If any case is going on against the company, pending against the company, some like in that case, the company has to disclose this. Otherwise, there is no Benami. Struck off companies are those companies which either default with the company's law, in the provisions of the company's law, and their name is struck off like this. Their name is struck off from the register maintained by the registrar of companies, like rusticating you from school, college, struck off like this. Literal meaning. Okay. Ratios. These ratios have to be disclosed by the company New Point. From this year onwards, you have to disclose these ratios. Calculate these ratios on the basis of financial statements of the company, current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover, trade receivable turnover, trade payable, net capital, net profit, return on capital employed, return on investment. Ratio analysis. This used to be my favorite chapter. Ratio analysis. This till date, it is my favorite chapter. The company shall explain the items including the numerator and the denominator for computing the above ratios. And you have to calculate it for the previous year as well as the current year. In the vertical format, you have to give the figures for previous year as well. And you should explain if there is an upward or downward trend by more than 25%. If there's a change in ratio from the previous year by more than 25%, the company will have to explain the reason. The auditor should make sure that these disclosures are being given by the company. Right? I suppose this slide is the most colorful, right? It's so many ratios, it's so many colors. Okay, no more doubts on this. I know you all have been waiting for this, but just understand details of cryptocurrency or virtual currency, where the company has traded or invested in crypto or virtual currency during the financial year. Following shall be disclosed: profit or loss on transactions involving such currency, amount of currency held as at reporting date, deposits or advances from any person for the person of trading or investing in cryptocurrency. That is it. You only need to know this only. That's it. Taxation part, everything taken care of. This the company has to disclose. Siddharth, the formulae have certain logics, right? I suppose you have to cram it somewhere, but some formulae have certain logics. That is why it is actually good, because you get to play with formulae and the twists and turns in different questions. So I hope the miscellaneous part is covered. The disclosures, no, I don't have been ready. I haven't invested in crypto or virtual currency. Right? Okay. So we are done with it. Any doubts till now? Yes, please. Any doubts till now? Another 5 minutes. I'll show you, as I promised you, the balance sheet and disclosures of Tea and Cookies Private Limited I prepared. Is the balance sheet of Tea and Cookies Private Limited visible to all of you? I've shared the screen. Can you see it on your screen? Please reply with a yes if you can see it on screen. At last, it is completed chapter 9. Yeah, really, 15 days. What a sigh of relief, right? Okay, see, this is a vertical format of balance sheet. As you can see, this is just a draft I've prepared just to let you guys know that how is it disclosed everything. We have read about disclosures, right? So if we cannot see it practically, it will not be easy for us to remember. So I'm showing you the practical part. How is it shown actually? See, you can see figures in thousands. I've taken figures in thousands based upon the total income of the company, Tea and Cookies Private Limited. So this is for current year and this is for the previous year. The first part is equity and liabilities, shareholders fund, where we have share capital, reserves and surplus, money received against share warrants, total shareholders funds. Then we have share application money pending allotment. We have received the application money, but we'll be allotting it in future. It is shown over here. Non-current liabilities, as we did long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. We did it in provisions, and we did the A and B and C part in borrowings. Current liabilities we have done today. Short-term borrowings, trade payables. Short-term borrowings were current maturities of due long-term loans due within 12 months. Other current liabilities we did with trade payables, and short-term provisions we did at the last. Then let us see the annexures to the balance sheet first, all this. So I hope you all can see share capital disclosure. But did we read authorized capital to be shown separately? 10,000 equity shares of rupees 100 each authorized capital. So this company has an authorized capital of 1,000 to 1,000, 10 lakhs. Remember the amount is in 1,000, the figures are in 1,000. The second part was issued and subscribed and paid up capital. So there are 5090 equity shares that have been issued till now in TN Cookies Private Limited of rupees 100 each. They are fully paid up. So out of 10 lakh, 5 lakh 9,000 is the issued, subscribed and paid up. All same. Okay. Then type of equity share capital. Number of equity share with voting rights, number of equity share with differential voting rights, number of equity share with restriction in respect of distribution of dividend. You have to explain. Now we have the most common one in TN Cookies Private Limited, number of equity shares with voting rights. This was our share capital part. Now moving on to reserves and surplus. Reserves and surplus, there are no other reserves, general reserve, free reserve with TN Cookies Private Limited. We only have profit and loss. They are not meeting any specific reserves or capital reserves. Opening balance of profit and loss, it was this one. See, it is matching with the closing balance. It has to match with the closing balance with the previous year. Profit during the year, this one. Closing balance to be transferred under reserve and surplus. Then we have long-term borrowings classified as term loans from bank, from other parties. There are no term loans. They are loans and advances from related parties up to the amount of this much. And this amount is further carried over to long-term borrowings. Trade payables. As per new disclosure, as per outstanding, less than 1 year separate, 1 to 2 years separate, 2 to 3 years separate, more than 3 years separate. Now total over here. In TN Cookies Private Limited, we have only less than 1 year trade payables. And further classified as MSME, others. And if there are any dispute with respect to MSME, others, if they are in dispute. See, such a detailed classification. This is for current year and this one is for previous year. Other current liabilities, see, audit fee payable, salary payable, taxes payable, everything over here. Short-term provisions, provision for income tax. Right? I hope the equity part is clear. Now coming to the assets part. Non-current assets. Remember the disclosure? Property, plant and equipment and intangible assets. Property, plant and equipment separately. Intangible assets separately. Capital work in progress separately. Intangible assets and development separately. A and C are related, B and D are related. TN Cookies Private Limited just has fixed assets, no intangible assets, no capital work in progress, no intangible assets under development. And we had to prepare a schedule of PPE, right? What did it ask? Gross value, additions during the year, deletions during the year, depreciation, accumulated depreciation till now, Added during the year, closing accumulated depreciation, net block of previous year and net block of current year. Here you can see PPE. Here it is PPE of Tea and Cookies Private Limited. See, refrigerator, goods, mobile phone, furniture, TV, computer, scooter. This is a gross block. Gross block without any depreciation. Opening balance, addition, sale, disposal or discard, total. Now, depreciation. Accumulated depreciation till now. Addition means provided during the year. Deducted on because of disposal. Total accumulated depreciation till now. Now, net block is total gross block till now minus total accumulated depreciation till now. This is net block. This is PPE schedule which we have read in disclosures of PPE. Further, we had non-current investment, deferred tax asset, long-term loans and advances, which did in the previous session, other non-current assets, current assets, current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. See over here. Here you are, net block of property, plant and equipment. I showed you the chart. Deferred tax assets, then closing stock of raw material, work in progress, and finished goods. We did it in inventory, disclosure in inventory. Trade receivables. Again, as per age. Undisputed, considered good. Undisputed, considered doubtful. Disputed, considered good. Disputed, current, doubtful. In this way, you'll have to disclose. Then cash and cash equivalents. Cash in hand, cash at bank, fixed deposits with banks, checks in hand. Disclosure with respect to cash and cash equivalents. Other current assets we had TDS, TCS, advance tax deposited, income tax refund receivable, securities, ITC balances of GST, advance given to suppliers, advance given to employees or imprest given to employees. All this. This was a balance sheet. Right? Now, ratios, which we discussed at last. See, can you see the ratios? Debt equity ratio for both the years. Debt service coverage ratio, return on equity, inventory turnover ratio, trade receivable turnover ratio, trade payables turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment, current ratio. We studied all these ratios. They have been prepared for Tea and Cookies Private Limited for previous year as well as the year under audit. Now, this was a miscellaneous part. Details of promoters holding of equity shares. We did it in disclosure of share premium. In PPE, title deeds of immovable property not held in the name of the company. See? Capital work in progress or intangible assets under development. Nothing applicable because Tea and Cookies Private Limited doesn't have any capital work in progress or intangible assets under development. It doesn't have any immovable property other than in the name of the company. I hope by having a physical look at the detailed financials, it makes more clear. Nilabjo, my answer is a chapter chart. So I have divided in the presentation itself, there are 180 slides. I have divided in the same way, divide as division, as more division you can make for further chapter. Proper classification, sub-classification of the topics. This will help you revise a chapter. Divide it into as many parts as possible and never sit for the whole chapter in one sitting. Never go for a chapter in one sitting. Always divide it, and in different sittings you have to do this chapter. I'll provide you with a chapter chart as well soon. Okay. Any more doubts? Are we ready for the test? I hope everyone has downloaded the case study which I uploaded. Siddharth, there is a catch. Okay, but I always have this thing that when you read something and you actually see it physically, some of you might not have started your articleship, some of you might have started. Even in the first year of articleship, some of the articles do not get to do the company's work because it requires quite a precision. So that is why I just brought it for you, so that you can have a glimpse of how the financial statements actually look like. And only by having a glimpse of the financial statements, you could be relate itself to the presentation and disclosure requirements. It will help you actually retain that part. Shubham, if you can burn the midnight oil and you feel that actually you can actually go for it, you can actually prepare for it, revise it, then I would suggest you should definitely go. It depends upon your capacity as a human, your capacity as a student, how much exertion you can bear. Only then, otherwise not, because it's only September and October left. Okay, let's move for the test. I hope all have downloaded it. So let me take you to the test. I hope everybody can see this. This is what you have downloaded. Okay, tell me who all are in for the test. It will take 10 to 15 minutes. Who all are in for the test? Only I'll be evaluating only those people who are replying and who are here. So just let me know. I'll be marking the answers for only those people who are all in the test. Come on. No, Hiral, they are two different things, not in the name of company and Benami. Not in the name of company, it would be in the name of directors or relatives of directors or some system concern. Benami means untraceable people. Siddharth is in, Hitesh is in, who all are in for the test? Aditi, Shriram, Akashneel, Hiral, Khushi, Shaktivelan, Nilabjo, Meghna. Pant Reddy is always in the mood of masti. Huh? Okay, I've got only 11 names, right? No other people? Where are Karthik and Rahul? ये कहाँ गायब हो जाते हैं? या इनका नेटवर्क स्लो है? Okay, चलिए. Let's start with the case reading. You are a partner in ABC and Company, a chartered accountant firm based in New Delhi. ABC and Company has been appointed as statutory auditor of Tea and Cookies Limited. Now it is not private limited, it is a limited company. Of Tea and Cookies Limited, a public limited company which manufactures and sells tea leaves, actually. Please bear with the word tea leaves or tea, and related confectionery items, and has many branches all over India. Tea and Cookies Limited has been exporting tea and cookies since past 2 years. However, the domestic sales have contributed towards major source of revenue for the company. You being the engagement partner have started the audit for the year ended 31st March 2022 along with our team members. Now let's see what the observations have been. Okay, the screen is not visible. Just a second. I forgot to share the screen. I'm really sorry. Now it's visible. I'm sorry. I'm really sorry. Okay. First part. One of the team members, CAB, started verification of inventory. In addition to other procedures, he also checked that valuation of inventory had been recognized in accordance with AS2. During detailed checking, he noticed that the amount spent on salary of administrative employees and normal wastage on the production of the tea had not been added to the valuation of inventory. The contention of the company was that since the cost was not directly related to the production cost and so not added to the cost of inventory. This is one observation. Right? Second, you have to remember these observations for the questions, right? I uploaded this case study beforehand just so that you can have a copy. CAB also noticed that one of the suppliers of Tea and Cookies Limited, Mr. Coffeewala, had sent some raw material to the company for storage in their warehouse. Inventory lying with third party or inventory of third party lying with us. In March 2022, due to renovation going on at his warehouse, Coffeewala's warehouse, his stock could be damaged, and so he had requested Tea and Cookies Limited to keep the same in their warehouse. Tea and Cookies Limited contended that since the raw material was anyway billed to the company the next month in April, so the same had been included in the valuation of stock, since physically the stock was present in the warehouse of Tea and Cookies Limited as on 31st March 2022. Third observation. The company had issued share at premium, and the premium received from the shares had been transferred to a securities premium account. The same was then applied in writing of the expenses of selling the tea, writing of preliminary expenses of the company, and also writing of the commission paid to the sales agent. You have verified the same in detail. Fourth observation. While verifying the debtors, team member C noted that there were a few trade receivables pertaining to export sales, mainly to England. England में export कर रहा Tea and Cookies Private Limited. Mr. C, the auditor, verified the same with respect to the invoices issued and other supporting documents. The amount booked as on 31st March 22 was based on the exchange rate as on the date of invoice. Fifth part. Mr. T, another team member, verified the fixed assets of the company. Tea and Cookies Limited had purchased few cars for its directors during the year of audit. The same were appearing in the fixed asset schedule of the company. Mr. T verified the same with respect to the invoices, as well as physically verified the assets in the company's premises. Since the cars were for the official use of the directors, they were purchased in the name of directors of the company. Mr. T verified the amount with the invoice and checked the registration and insurance documents. Sixth observation. One of the article clerks was assigned the work of verification of provisions appearing in the balance sheet. He wanted to understand from you the circumstances in which a provision is recognized in the books of account. You explained him the situations in which an entity recognizes provisions in its books. Seventh, Tea and Cookies Limited has invested in the shares of other companies. One of the companies has declared dividend on its shares. Tea and Cookies Limited has not recognized the same in the profit and loss account. Team member R has asked you to look into the matter since she is unable to understand the reasons for the same. Actually, gender equality, one of the auditors is a girl as well. Eighth observation. The company had spent a huge amount on the repair and maintenance of the machinery used for the production of the tea. The amount was accounted for in two parts. Repairs were booked as a revenue expenditure, and annual maintenance charges were capitalized and added to the machinery cost. Mr. R has verified the same in detail and raised her observations. 9. Power and fuel expenses paid for the months of April 22 and May 22 have been included and shown as power and fuel expenses for the period beginning 1 April 21 and ending 31st March 22. Personal rent expenses of the son of one of the director, Mr. T, of Tea and Cookies Limited, have been shown as rent expenses of business of the company. Personal rent of son of the director. Next observations. Repair and maintenance expenses for the months of February 2022 and March 2022 were still outstanding and were not shown in balance sheet of Tea and Cookies Private Limited. Repair and maintenance expenses for the financial year 1st April 21 to 31st March 22 were very high as compared to financial year 1st April 2020 to 31st March 2021. The auditor, Mr. H, asked the appropriate authority about the reasons for such huge differences in amounts of two financial years. The last observation, while verifying the insurance expenses, the insurance policies were not shown to auditor Mr. H. I hope everyone has this case study. Now, should we move towards the questions? Okay. Okay, chaliye. I'm sorry. Questions, right? First question, and you'll get only 1 minute for answering one question. Is the raw material lying in the warehouse of Tea and Cookies Limited accounted for correctly in its books of account? Options are here in front of you. Is the raw material lying in the warehouse of Tea and Cookies Private Limited accounted for correctly in the books of account? Yes, Bandeti, due to your comment. A, B, C, D, come on, reply me. Come on, 1 minute and I'll record your answers. Next question. Which exchange rate is considered for accounting of foreign debtors at the year end? Which exchange rate is considered for accounting of foreign debtors at the year end? Shriram, why are you not answering? Pooja, you can answer as well. Shriram, do write the question number with it. Shriram, have you answered for question number 1? You haven't answered for question number 1, say Shriram. Okay, next question. Which of the following assertions with respect to fixed assets has not been complied with by the company? Okay, let's move to fourth question. Which of the following conditions is not required to be met for recognizing a provision? Siddharth? Okay. Nilabjo, I have not received your answer for the third question. And Shriram for your first question. Okay. Fifth question. Fifth question. Dividends are recognized in the statement of profit and loss only on fulfillment of which condition? Yes, Siddharth, I got all your answers. Akashnil, have you answered for the fourth question? I have not received answer for the fourth question from Akashnil and Khushi. Sixth question. Power and fuel expenses paid for the months of April 22 and May 22 must be shown under asset side of the balance sheet of Tea and Cookies Limited as on 31st March 2022 as. Yes, Labji, your answers are visible. Akashni, what have you answered for the fourth question? I couldn't get it. Okay, Shriram, got it. Now moving to seventh question. The personal rent expenses of the son of one of director, Mr. T, were added to rent expenses of business of Tea and Cookies Private Limited. The amount of personal rent expenses of the son of director, Mr. T, must be. Okay, let's move ahead. Eighth question. The repair and maintenance expenses outstanding for the months of February 22 and March 22 must be shown under liability side of balance sheet of Tea and Cookies Limited as on 31st March 2022 as. Okay, next question. The auditor, Mr. H, asked the appropriate authority for reasons of huge differences in the amount of 2 financial years of repair and maintenance expenses. By appropriate authority, Mr. H was referring to. Yes, Hitesh, your answers are reaching. Hiral is changing answers. Huh, Hiral? Okay, 10th, in verifying insurance expenses, the insurance policies will provide auditor Mr. H as. Hiral, you haven't answered to question number 9. Got it, Hiral. Okay, the last question. Shri Ram. Okay, she. Hiral. Hiral is changing answers time and again. Huh, Hiral? Siddharth got ya. Aditi, have you answered question number 10? Aditi and Shakti Velan, have you answered question number 10? Okay. So there were 13 people over here. 14 actually. Siddharth, Hitesh, Aditi, Shriram, Akashnil, Hiral, Kushi, Shaktivelan, Nilabjo, Meghna, Bandreddy, Akash, Pooja, and Rahul. So Pooja and Rahul's answers were almost, they were answers were reaching to some questions and not to some questions, right? So I suppose we have Akesh, not Akash, Akesh, 11 people. Now what I'm going to do is, yes, Bandreddy, your answers reaching you. Shaktivelan. Okay, Shaktivelan, you have answered. Right. Okay, fine. Kushi has not answered for fourth question and Shaktivelan has not answered for second question. Have you guys answered? I'll find it from the file. Right. So what I'm going to do is I'm going to upload the remaining notes. I told you I'll be uploading the whole chapter at one place. Fine. And further the chapter chart and this case study, which was a part of the test with answers and your marks after evaluating your answers. I'll attach with this case study the marking with your names. Okay. Keeping in mind the paucity of time, you'll be getting this case study. You already have this. I'll be giving the questions along with the answers. The answers would be in bold. To each and every question, the answers would be in bold, right? So we'll evaluate all your answers. I've written them down and will mark you accordingly. And to this test itself, at the last page, after the questions, I'll attach the mark sheet with your names and the marks scored by you in this test so that you can get an appraisal. How well did you perform in this step? And I'll be doing this by tomorrow or by Sunday. Okay? No issues, Pooja. Fine, done. So let's meet for chapter 13 and we'll conclude audit accordingly. Right? Together. Wishing you a good night. Take care of yourselves and study well. Take care of your health as well. See you soon in chapter 13. Take care. Bye-bye. अरे बाबा आंसर्स जो मैं अभी अपलोड करूंगा which I'll be uploading, in that the answers would be in bold out of all the option. Take care everyone. Bye bye. Ashok ji.